Do you already have your emergency fund set up and you have a high yield savings account to hold your money, but you're wondering if there's another place you can park your cash while you're waiting to learn how to invest? Well, this video is for you. We're going to be discussing the Fidelity Cash Management Account and how it compares to a high yield savings account. Let's go, Nicole.
Okay, so what exactly is the Fidelity Cash Management Account? Well, it's a brokerage account, right? Which means it's a taxable investment account. So it's not a bank account. But what's interesting is that it has the features that you will find in most typical bank accounts. It has checking features, it has saving features, and like I said, it has investment features. So that's exactly what a Fidelity Cash Management account is. Before you decide what to invest in, or while you're waiting to decide what to invest in, your cash can be earning money on it, and you're also able to spend the money while you're waiting.
Now, if we were looking at the Fidelity Cash Management Account versus a high yield savings account, there are several differences, right? One, a cash management account, and specifically the one at Fidelity, comes with check writing abilities and it comes with a debit card. And the interest rates are pretty similar too. So if you're looking at it versus a high yield savings account, most high yield savings accounts do not come with a debit card, okay? And you definitely don't have check writing abilities. So if you want to do that at a typical bank, most likely what you're going to do is open up a checking account and have a high yield savings account so you can have that ability and also have a debit card. With a cash management account, especially the one at Fidelity, you can have the same high yield on that account, like the same interest rate or probably comparable to a high yield savings account, but you also get the ability to write checks and have a debit card. So it gives you a lot more flexibility and you don't have to have two separate accounts. You could do that within one account.
Now, what also is nice about the Fidelity Cash Management account is that it has no minimums, it really has no fees, and on top of that, they reimburse you ATM fees, not only nationally, but also internationally. If you're using an ATM machine and international, they reimburse your fees. That's something you're not going to really find on a high yield savings account. So that's something interesting. Now, when it comes to the rates between a high yield savings account and a cash management account, Fidelity offers you two options of what to do with the cash that you put into the account, right? They have one option, which is invest in a money market account, which the ticker symbol for that is SPAXX, right? That's their money market account. And right now is paying around 4% annual yield. And then they have another option, which is their sweep account, where they're putting uninvested cash and they're dividing it amongst their partner banks that they have. That is a FDIC insured portion where you can actually put money in that actually is not confined to the $250,000 limit that you have at a regular bank, even a high yield savings account. So that's a good thing. With that cash management portion that's going into sweep accounts, you can actually have up to $5 million that they're going to split amongst different banks. That still allows you to get that FDIC insurance, which I think is a really nice thing. Now, you're losing some interest on it. You're getting around 2%, but you're allowed to have a higher minimum than what you would have at a regular bank.
Now, just hearing you say $5 million that you have in cash sitting around, I must be doing something wrong because having that much money in cash is fantastic, but I don't know, you should be investing it somewhere. But let's look at it. So, if we're looking at the Fidelity Cash Management accounts, like you said, there's two different ones, right? And when I was looking at the information with this, it was a little confusing, so I decided to open one up. And when you're opening it up, it gives you the choice between putting it into their money market fund or putting it into their cash sweep account. So it's very easy for you to decide which one you're going to pick. I'm not sure if I can choose to change it later on, but when I open it up today, very easy to open it up and it asks you right there, do you want it in the money market fund or do you want it in the sweep account? You got to understand, the money market fund, they're not guaranteeing you're going to make the 4%, and they can't guarantee that you won't lose any money, but they're putting it in securities they're not volatile really at all. I think it's government securities. These are just meant to make sure that you keep your money that you're putting in there and you're making a bit of a return on it, but you're not trying to like knock it out of the park. So it's less volatile than you buying stocks or anything, but you're going to make a bit of a return. That's why it's not insured by the FDIC. It's insured if Fidelity went bankrupt overnight and you get $500,000 up to $500,000 back based on what you had invested with them.
So let's just make it clear. A money market account is an investment account. It's an account that's being professionally managed by money managers, and they're investing your money into short-term securities like treasury bills, things that are maybe 3 months and out before they mature. So it's relatively safe investments that they're making, but it is an investment account. So with that, there comes some risk. That's why it's not FDIC insured. Okay. No one's investing your money into a money market account when you're in a high yield savings account. So that's the difference between the two.
Now, another difference is how often can you take your money in and out of a cash management account versus a high yield savings account, right? So, high yield savings accounts are meant for you to save for the long term. So, there are rules on how many times you can withdraw from that account. Most of the time, it's 6 times in a month, okay? But with a cash management account, you're able to do as many transactions and as many withdrawals as you want within the month. There's no limit on the transactions and the withdrawals that you can do using that account on a monthly basis. So that might be something you want to think about. Do I want more flexibility to do what I want with my money, or I'm just going to leave it in a savings account anyway? So it doesn't matter to me how many transactions or withdrawals, because that doesn't apply to me. You have to ask yourself those questions.
Yeah, I mean, even if you're saving for something, if it's an emergency fund that you're having in that account and you're saving for emergencies and that emergencies actually happens, you're going to have to take out that money. Now, you might not have to take it out all at once. You might have to do more than 6 transactions. So you have to be aware of that. If an emergency came up and you actually need the money out that account, will you be hit with some fees or maybe even stop because you went over that withdrawal limit? Okay. So the reason why is because they want to discourage you. They want to make sure that you keep the money in the account so they can make an interest on the money for you, but also because it's a savings account. More transactions, if you feel like you're going to go in and out, that's more what a checking account is for, not a savings account.
Now, if you're looking at, okay, this all sounds good about a Fidelity cash management account versus a high yield savings account. But one of the most important things is, how do I get my money into that account? So if you're looking to put money into that account, which you should, because that's the whole purpose of opening up and getting the rate that they're introducing to you, you want to be able to put money in an account. So how do you put money into that Fidelity cash management account? You can do a direct deposit. So you can have your paycheck deposited into that cash management account, just like you would a high yield savings account or a checking account, right? You can also take a picture of a check and do mobile deposit, or you can transfer it from the bank that you currently have and put money into that cash management account that way. You can just do a transfer between your banks. And it's very easy to set that up too. I just did it. It was very easy to link my bank to the Fidelity cash management account so that I can start depositing funds into that cash management account and choosing to either put it into the sweep account or put it into the money market fund.
Now, what's interesting is that this is, again, a brokerage account by Fidelity, right? So if you're liking Fidelity and you're thinking about Fidelity as a brokerage company that you want to use maybe for your retirement accounts or your taxable brokerage account or any like a health savings account, this might make it more convenient to also have that cash management account there because it makes it easy for the funds to be there when you decide, I know what I want to invest in. Let me have the money available. And it's an easy transition. It's very streamlined for you to get the money out of that account and then pay for the investments that you make. So that's something to consider too. When you're using another institution, another bank, you might have a delay on the timing of when that bank actually receives, when Fidelity receives the money from your bank. So there could be a timing issue. But if it's already in the Fidelity account, you shouldn't have that problem at all.
Yeah, I agree. If you already have a Fidelity brokerage account, whether it be an IRA, HSA, or 401k or something that is being held there, you can have your cash there too, so you don't have to go through multiple institutions. So I agree. So it's also beneficial if you just open up a brokerage account at Fidelity and you want to make sure you have money in there. So if you see something that you want to buy, an investment that you want to buy, you don't have to wait for it. So it might be beneficial for you to look at it. You can still have a high yield savings account and a cash management account at Fidelity. You can have a high yield savings account at the bank you currently have, but then have some money at Fidelity in their cash management account.
Yeah, as you know, on this channel, we talk about three main brokerage companies when it comes to investing, especially investing for beginners. And that would be Vanguard, Fidelity, and also Charles Schwab. We have accounts at all three, and all three could be useful depending on your circumstance and exactly what you want in terms of investment choices, platform, and also customer service. So with that, having this added feature of a cash management account, if Fidelity is the one that you decide to go with as a brokerage account, it could be definitely a plus. With that, if you already have a Fidelity brokerage account and you have money sitting in this cash management account because you're just unsure what to do next and what to invest in, then I would like to invite you to join our email list called the Wealth Pack, where we talk more about money management and also investing. And we gear it towards investing beginners because we want to show you how to build wealth with investing, which is what Nadia and I did. And we love to sprout that message of not just learning how to invest to grow your wealth, but also how to protect it as well. So if that's something you're interested in, please check the link in the description below.
Yep, and in the description below, you'll find out more information about different products we have to help you learn more about how to invest on your own. Okay, do it yourself investing. You can do this. Just believe you can. And it's a lot easier than you think to start managing your money. Because at the end of the day, no one should care more about your money than you do. So you should definitely learn how to invest it and make it work for you.
That's true.